Hi guys, today's video is based on a partnerships question, and this was from October-November 2022. It's a very recent paper, and this was basically question number 5 that paper, and it's actually interesting because they have asked you to make the current account, all the current account details in the extract of the statement of financial position. So they don't want you to make a separate current account for the partners. They want you to make the current account details in the statement of financial position. That is basically why I chose this question, because it's quite different and students find it quite different because it's not like a normal, they've not asked you for a separate current account. So they're saying here Sian and Tom are in partnership sharing profits and losses in the ratio in the proportion to capital invested. So here the capital account balances, they are 150,000 for Sian and 100,000 for Tom. So that means if you take out the ratio for this, 150,000 and 100,000, if you take out the ratio, so the ratio would be 150,000 is to 100,000. I can tell this that this is a ratio of 3:2. So the profits are divided into 3:2. They're saying then here the partnership agreement states the following: interest on capital is allowed at 6% per annum. Sian is allowed a salary of 20,000 per annum. Interest on drawings is charged at 3% per annum, charged for each proportion of the year. The profit for the year before appropriation for the year ended 31st March 2022 was 59,150. Drawings made during the year for Sian, they have two set of drawings. The first drawings is on first date of the year. So their year here is, I know the year because they have mentioned in the question that we need to make appropriation account for 31st March 2022, which means that the year under consideration is 1st April 2021 to 31st March 2022. This is my year. So what they are telling you here is that there are two sets of drawings that Sian made during the year. One was on the first day of the year. So that means 8,000 was on the first day of the year, which means that for this 8,000 bit, you need to apply a 3% full year's drawing. So that will be 3% and per annum. So you'll just directly multiply 8,000 into 3%. So I'll do here 8,000. And this is for Sian. So I'll write here Sian. And I'll write here 8,000 multiplied by 3%. So I'll get a value of 240. This is for 8,000, and for 6,000, Sian has withdrawn 6,000 on 1st October 2021, which means that's middle of the year. So if you count April, May, June, July, August, September, these are 6 months. For the first 6 months, for the full year, it's 8,000. For half year, it's 6,000. So on 1st October, that is middle of the year, he actually withdrew 6,000 more. So 6,000, you should apply a percentage of 3%, but you should multiply this by 6 divided by 12, because they have mentioned in the question that drawings need to be, the interest on drawings needs to be charged for each proportion of the year. Okay. So that is for Sian, and for Tom, I'll basically write here Tom, and I'll write here, so for the full year it'll be 10,000, because on the first day of the year he had withdrawn 10,000. So I'll write here 10,000 multiplied by 3%, which will give me 300. And then again, Tom had withdrawn on 1st October, that is middle of the year. He has withdrawn 12,000, and this again you'll write here 3% multiplied by 6 divided by 12, which will give you a value of 180. So that is for Sian, it's 240 plus 90, and for Tom it's 300 plus 180 for interest on drawings. So we'll just start our appropriation account for the first, like the first thing is profit for the year in the appropriation account. So I'll write here profit for the year, and that I will find out from the question. The question says my profit for the year is 59,190. So I'll directly write this in the second column, 59,190. Then I'll write here add interest on drawings, and then I'll write here, first I'll write Sian's interest on drawings. So I'll write here Sian, I'll write here 240 plus 90, which will give me 330. And then I'll write here Tom, I'll write here 300 plus 180, which will give me 480. And this will total to 810. And 59,190 plus 810 will give me 60,000. Then obviously you need to follow the format and appropriation account. So after interest on drawings, whenever we add interest on drawings, then we write less interest on capital. So I'll write here less interest on capital. So the logic of it is that interest on drawings are basically partners are charged interest on drawings, which means their capital is reduced because of this, and this is basically added to the profit. Interest on capital is given to the partner as a reward for investing in the business. So here I'll take out interest on capital. For Cyan, I'll do Cyan here. The capital that Cyan has invested is 150,000, that is given in the question. I'll basically apply 6% because the question says that interest on capital is allowed at 6% per annum. So I'll write here 150,000 multiplied by 6%, which will give me 9,000. And then I'll write here Tom, I'll write here 100,000. 100,000 is Tom's capital, and I'll multiply this by 6% as well. So I'll write here multiply by 6%. This will give me 6,000. This is my interest on capital. Then I'll write here less salary. So I had read this in the question that Cyan is given a salary of 20,000 per annum. So this is over here. Cyan is allowed a salary of 20,000 per annum. So I'll write this 20,000 here. And then the total will be 9,000 plus 6,000 plus 20,000 will give me 35,000. So 35,000, when I subtract 35,000 from 60,000, I'll get 25,000. This is my residual profit. And now I'll basically divide this in profit shares. I had calculated the shares in the beginning. The proportion of capital invested was 150,000 is to 100,000 is basically 3:2. So I'll simply write here for profit shares, I'll write here Cyan, I'll write here 3 divided by 5 multiplied by 25,000, which will give me 15,000. And for Tom, I will do 2 divided by 5 multiplied by 25,000, which will give me 10,000. And now this will obviously be equal to the residual profit that I had calculated before. So this will be equal to 25,000. So that's it for appropriation account. In the next part, they are asking you to make an extract of the statement of financial position. Now they're telling you the current account balances on 1st April 2021 were Cyan had a credit balance of 3,000 and Tom had a debit balance of 7,000. So what you need to do is that you need to make a statement of financial position extract, and that will be the capital section of the statement of financial position, in which we are telling we are basically showing the capital account details, and we are showing the full details of their current accounts. So the things that we record in the current account, we are now going to record this in the statement of financial position in the capital section of the statement of financial position. So I'll just write here capital, I'll write here Cyan. In the second column, I'll write 150,000 because Cyan's capital balance was 150,000. Then I'll write here Tom, I'll write here 100,000, and this will total to 250,000. And then I need to basically record my current account details. So I'll write here current accounts. I'll write here Cyan's current account and basically Tom's current account. I'll make it like that. Also, one more thing, anything that is basically credited in the current account will increase the current account balance. So we'll start with the balances. So Cyan's balance is 3,000. That is a credit balance, and Tom's balance is 7,000, which is a debit balance. So it's a negative balance. Whenever the partner takes out more money than what profit shares are given to the partner, so whatever profit shares are allotted to the partner, if the partner takes out more money from the business, that means now the partner owes the partnership business. So that 7,000 is a negative 7,000. So in the past, Tom had taken out more. So the drawings Tom had taken out from the business were more than what profit shares he was given. So that is why it came out to be a negative 7,000. Now what you'll do is that you'll have to first add things that you basically normally add in the current account. So whatever is credited in the current account, you will add that, because whatever is credited in the current account is actually those things actually increase the capital of partners. So I'll write here, add interest on capital. So for Cian, interest on capital was 9,000. For Tom, interest on capital was 6,000. And then I'll write here, add salary. For Cian, the salary was 20,000, and Tom did not receive a salary. And then we have profit shares. So profit shares for Cian, the profit share was 15,000, and for Tom it was 10,000. So I got all these details from my appropriation account. So interest on capital is 9,000, 6,000 for Cian and Tom, and for Cian the salary is 20,000, and for profit shares for Cian and Tom are 15,000 and 10,000 respectively. And then what you'll do is you have to calculate the total here. When you add these values to the opening balances, what you get here is you basically get 47,000 for Cian, and for Tom you get a positive 9,000. So you start with a negative 7,000, you add 6,000, and you add 10,000, you get a positive 9,000. What you do is now that you subtract things that are debited in the current account. So I'll write here less interest on capital, less interest on drawings. So interest on drawings basically reduce partners capital, and it's basically charged from partners capital, because this is something so that partners are discouraged to take out money from the business. So interest on drawings for Cian was 330. This I'm taking from my appropriation account again, 330 for Cian and 480 for Tom. So I'll subtract 480 from Tom's balance. And then I have drawings. Again, drawings are also debited in the current account. Drawings decrease capital. Interest on drawings also decrease partners capital. Current account is basically used for putting all the changes in partners capital. So capital account stays fixed in the partnerships, and you put all the changes in the current account. So now drawings, for drawings, 14,000 was drawings for Cian. So if you look in the question, yes, 8,000 plus 6,000 is 14,000, and for Tom it's 22,000. So you have to subtract 22,000 from Tom's balance. So now for Cian you get a balance of 32,670. This is the closing balance of current account, basically balance carried down. And for Tom you get a balance of negative 13,480. So the net effect of it is 32,670 minus 13,480 will give you 19,190 positive, because one value is positive 32,670 and one value is negative, that is 13,480. So now we'll add 250,000 and 19,190. So we'll get 269,190. This is my capital section of the statement of financial position, in which I'll put all the details of the current account in the statement of financial position only. Then they're saying explain the significance of a debit balance in a partner's current account. So debit balance arises in a partner's current account when the partner takes out more money, withdraws more money from the business than his profit share. So overall the share, interest on capital, salary and profit shares, whatever the partner is allotted, that amount is basically lower than what the partner is taking out of the business. So in this case, I'll just write a debit balance in a partner's current account is when partner's drawings are greater than his total profit share, are greater than his total profit share. Also, a debit balance represents the amount the partner owes to the partnership. So I'll write here also the debit balance represents an amount the partner owes to the partnership. So the partner has to pay the partnership that amount. So, okay. Then they're saying Sian and Tom prepare their financial statements on a going concern basis. Going concern is an accounting concept. Now they are telling you explain the accounting principle of going concern. So it's very simple. Going concern concept says, so I'll write here, going concern concept says that the business will continue to operate in the foreseeable future, which means that the business is not intending to close down, and we are not intending to sell the business. We're not intending to sell the business in future. So that means it will continue to operate in future. So that means we have to value our non-current assets at net book value, not at selling price. Because if we have the intention of selling the business, we would still consider selling prices of non-current assets. But if we don't have any intention of selling the business, we have to value our non-current assets at net book value. So you'll write here, hence the non-current assets will be valued at net book value, not at market value. That's it. So thank you so much for watching. That's it for this question.